All right. Back to the action once again. I hope you guys and gals had a fantastic quad witching. And of course, happy Father's Day to all the dads out there. But it's time to get back to work tonight. It's Monday evening after all. It's June 22nd, 2020. My name is Joseph, in case you forgot. I know it's been a long time since we last worked together. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a great video in store for you guys tonight. The charts are already in the background. As you can see, we got the oil, we got the E-minis, and of course we got the gold. Got a lot of interesting opportunities I see setting up for tomorrow's trading session. I also want to grab the calendar for this week as well. Got some big news tomorrow, and I want to make sure you know when to be at your desk to capitalize on it. Before we jump in though, I got a lot to talk about tonight on our first newsletter back from the break. Before we jump in and get our hands dirty here tonight though, I just want to remind you guys, make sure you subscribe to this YouTube channel if you haven't done so already. That way you don't miss all the good stuff we publish every evening on this video. Don't forget, if you have any questions for me tonight, drop those questions in the comment section below. And as always, if you tune in every evening to watch this video newsletter, if you're anything like me and you use this video to get your mind right and get your charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys and gals supporting this channel by subscribing, typing those questions in, and if you like the video, hit that thumbs up button for me. Always appreciate you guys tuning in every evening on this video. But enough of the intro. Let's get this party started. I want to kick off tonight's video by checking the calendar for tomorrow, courtesy of Econo Day. Let's take a look at the schedule here for tomorrow. Tomorrow, of course, is Tuesday. It's June 23rd. Now, we have a relatively quiet next couple days ahead of us here as we go into the last couple drops of the month. It's going to be a very interesting next couple days here. You get the end of the month, obviously, next week. So we always talk about as the markets get closer to the end of the month, we tend to see more volatility get in the markets, right? So we know that next week, we got a couple days next week, right? We'll be here, obviously, this week. A full week this week, and we got just a little 2 more days left next week. So those 2 days next week, that's going to be the real pressure cooker, especially because it'll be ahead of a holiday weekend. So we'll talk about that next week, but I'm not anticipating that real big uptick in volatility. Well, I think we probably saw enough volatility last week for everybody's appetite, right? But all kidding aside though, this week should be a relatively quiet week. It looks like volatility levels are relatively under averages right now. Next week though, that should be where we get those fireworks into the end of the month. Now, looking at the week as we have here, the big news for tomorrow, of course, Tuesday, June 23rd. I'll tell you, we really have a great little combo tomorrow of the PMI composite flash, which everyone's watching PMIs right now, Purchasing Managers Index. They're trying to avoid deflation, right, or stagflation as they call it. They're trying to keep inflation going higher here right now to kind of keep the economy growth going. So the PMI number and those new home sales tomorrow, 9:45, 10 o'clock Eastern time. I'll tell you, if you could only be at your desk tomorrow for 45 minutes to an hour, I would definitely make sure it'd be that 9:30 to 10:30 block. We'll go through 9:30 open. 9:45 is the news for the PMI number, new home sales at 10 o'clock. You know, we've been seeing a lot of really good setups in that 10:15 to 10:30 block lately. I wouldn't be surprised if tomorrow we see another big round of that just shortly after those new home sales numbers come out tomorrow at 10 o'clock Eastern time. So for tomorrow morning, that's really some of the best news of the week here. We're not really going to get a more big news day until we get later on in the week with durable goods and, of course, personal income on Thursday and Friday. I would say probably the next really big, powerful news report is that PCE, or the personal income number, at 8:30 on Friday morning. So definitely want to make sure you're at your desk tomorrow. Again, if you can only be there for part of the day tomorrow, that 9:30 to 11 o'clock block would really be where you could really get the meat and potatoes out of that news here for tomorrow. Now, don't forget, obviously, tomorrow we'll be in our trade room like we are every morning morning at 8 o'clock Eastern time. What I'll do is I'll put all of the membership information for you guys to get registered for tomorrow morning's trade room. I'll put that right below the video tonight. If you're on the blog, there'll be a big blue button for you. If you're on YouTube right now, I'll put all the membership links to get registered for tomorrow morning's trade room. That way you're ready for tomorrow by the video tonight, and we can trade it together tomorrow morning at the opening bell. I'll put all the information in the description of that YouTube video. So don't forget, grab the link in the description, get registered. And again, if you can only be there tomorrow for a couple hours, make sure you're there from that 9:30 to 11 o'clock block. That is definitely where you're going to want to be at attention tomorrow morning with me in the trade room. All right, speaking of tomorrow morning's trade room, let's get these charts all prepped up here now. The calendar looks pretty good. Again, a relatively quiet week here, except for tomorrow, that 9:45 to 10 o'clock hour. Definitely very excited about that with you guys tomorrow in the trade room. All right, let's get after it here tonight. Got some S&P, got some crude oil, and we got some gold here. What do we have going on here? Let's grab the S&P here first. What do we know first about the S&P right now? We know we're bullish. That's pretty obvious. Anytime I have a bull market, I always want to buy. I want to buy at support, right? I'm not much of a counter trend trader. I'm not trying to pick tops in this market right now, especially since the Fed basically told us they were going to be buying these these bonds until 2022, right? We heard that last week. So it's kind of an ongoing joke right now that stay with the trend right now, because there's a lot more than just the moving average that is dragging this thing higher right now. We got a lot of fundamentals, not to mention easy money being injected by the Federal Reserve Bank here into these markets. So definitely want to stay with the trend here right now and start focused on buy and pullbacks. What else do we know right now? We also know that most trending markets are going to want to make symmetrical kind of two-legged moves or measured moves, and we know we have that right up overhead. So as we go higher, it will be important that we recognize that resistance overhead and plan accordingly. Now, if I had it my way tomorrow, what I would love to see tomorrow is I'd love to combine that trend line along with that little range we saw earlier in the session. If I had it my way, I'd get a nice deep pullback into what I call a seller failure pattern here for the bulls tomorrow. That would be my ideal setup here for tomorrow. Buying at support, you'll notice all these great support levels, right? I get the low of this channel. I have the range, which will act like a magnet, right? So draw that price back to it. And then, of course, we got that big trend line coming down underneath that shallow range. That would be my ideal setup here for tomorrow. But you know me, right? They don't call me to ask for advice on what they should be going here. So we better get ready for everything. Now, my biggest concern is as the market runs higher here, right? If the market runs higher, I don't want to be buying as we go. And so what I'm really thinking here at this point is, if the market goes higher, I'm really looking for a couple different things here. One would be a trading range up here. And if we go sideways up around this measured move, which is likely, at least in the short term, my goal will be to buy underneath that range by using what I call failure patterns. So if we start going sideways here, right, in the overnight, and we kind of sit there going sideways around this measured move, I'll be looking for that range. Once I have the range, I'll be looking to buy into sellers' stop losses on the pullback, right? So keep an eye on that as we go. If the market runs higher here, if we pull back, I want to make sure these buyers can hold this pullback on strength. If I can get a strong breakout here, I'll call these 1, 2, 3 breakout patterns. I have no problem marking the high, marking up that low, and buying the pullback off the low of that new channel. Now remember, right, this is not going to be just a small little push higher here. I want to see it pull back to the moving average, and I want to see those buyers show me they mean it. If the buyers can push it higher, I'm good to go now. I get a lot of space open overhead. I'm going to mark up that high, I'm going to mark up that low, and I'm looking for a pullback now off the low of that hidden channel. So as the market tries to go higher, those are two key components I'm watching for here on the S&P. Now, another very possible scenario here, as you can see here, I've got this range marked up on the chart. There's a possibility here the market may sink right back down into that range right now. And if that's the case, my plan of buying down in that buy zone will be perfect. So if I can get this market to kind of chill out a little bit, go sideways for me, basically buy me some time, if we can see this market try to go lower here, right? Once those buyers run out of contracts to buy up there, hopefully the market will now take a dip. And when it does, I'm hoping that I can find some sellers now to come in, get them to commit off the moving average, and then once they're in, I can buy right into those stop losses with failure patterns, right? That would be another great opportunity if the market goes sideways. Now, if we only pull back, right? If we only pull back, we don't go sideways here, we just start pulling back now, there's a couple different things I'm watching for. One of them would be a relatively shallow pullback. You'll notice I've measured up this 91, we'll call it 91 half, 91 and 3/4. If I zoom in a little bit closer on this here for us, what we may have is with the market being really aggressive on this, right, to get that measured move accomplished, we may not get that deep pullback. You know, that's what I want, but we may not get it. And so if we get just simply a trap off this low, right, if the market literally just bounces off of that low here, at this point, I'm really worried about trading inside the middle of that range. And to avoid this, I'm going to look for what I call a nested failure with a trap entry. We're looking for traps, basically, right? So if we see a shallow pullback, my biggest concern is I'm still buying pretty high. You know what I mean? If we get a shallow pullback, yes, I do want to buy, and yes, I do want to buy at support levels. But if I don't get the ideal entry I want, then I've got to be a little bit more conservative, just a little bit more protective here, because I'm not going to have a very deep pullback. If we don't get a deep pullback, we're not going to get a good risk-reward ratio on it. If we don't get a good risk-reward, we have to be careful because it's going to be difficult to get other traders to want to take that trade as well. So I have to anticipate bears try a couple times. I'm looking for that trap entry right off of that low. That would be the one that would be the most difficult to take, right? That's the one that will take some nerves of steel because it's gonna feel very shallow, right? You're not gonna get the ideal pullback on it, and that's why that trap is so important. Now the easy one should be if we can get this pullback down now, again, into that sweet spot I talked about, right? The trend line, the battle zone down there. This is where all the stars will align because now hopefully we can get those bears to come in, let them commit off selling short, right? Once those bears try to get short off the moving average, now we got them, right? Now we got those bears committed. Now we know exactly where those stops are. We can buy into their stops. We can buy into stops. We can buy the pullback and make that rally now back up to retest the high, right? So failure into pullback, and then where's my target? Back up to retest those highs. So that will be the ideal, right? Getting that nice deep pullback here. But again, they don't call me in the morning and say, "What do you want, JJ?" Right? Tell us what you want. They don't ask me that. So in case I don't get where the ideal setup is, right, I'll have a good plan here of attack. Now, what's the best way to sell this market right now, right? That's the next thing here. So can we sell this? Well, like I said earlier, I'm not a big fan of counter trend trading, especially since the Fed has made it so clear to us that just a week or 10 days ago, we heard about them expanding their buying program into basically corporate equities, right? Or equity bonds, right? Of different equities, right? So basically picking the winners in these markets, so to speak, right? So we know the Fed is out there working their magic out there, whatever magic we want to call it, right? But that's why I'm very hesitant to try calling a top in these bull markets right now because everybody's in, right, on the punch bowl right now. So what's the best way to get short on it? The best way that I would get short on this is to wait for a reversal. Under normal conditions, I would say look for a crown reversal, which I do think is possible, but again, you're really going you're really going against the technicals, the fundamentals, and the, YOLO personality of this market right now. It's not the most reliable trade in the world. What I'd like to see to get short, though, is you got that weekend gap waiting all the way down there at 30.57. Don't forget, anytime, this is Friday's close, anytime Friday's close is different from Sunday evening's open, it creates that weekend gap, and those weekend gaps, boy, do they become great magnets. Now, what do I need for a reversal? 1, strong move down. 2, pull back to the moving average. And 3, a jump off the moving average. We have to get those bears to show us they mean it, because if they can't, right, I'll be waiting right there to buy right into those stop losses, to buy into those failure setups going back up to retest the high. But if those bears, if they can hold it, I have no problem being a seller. Once I see what I call a 1, 2, 3 reversal now, right? You'll notice we haven't seen that yet here today so far. Then I'm going to mark up those lows. I'm going to bring it up around those highs, and I'm looking for that hidden channel pullback. I call these 1, 2, 3 reversals into hidden channel pullbacks. My target, at least in the short term, is that weekend gap. If they really keep this party going, the retest of that low at 30.27 and a quarter down there, that would be the ultimate target. But I would first make sure I get that weekend gap filled first. Then we can go forward looking for that retest of that major low. And obviously tomorrow, right, we'll do a lot of this together, right, in our trade room. So 8 o'clock Eastern time, every morning, 8 o'clock, Monday through Friday, we'll do this together. If you're not with me tomorrow, for example, right, if you're here for the first time today, or maybe you can't join me every morning in the trade room, the next best thing is to grab our free trading classes. So again, the best thing is to come join me tomorrow morning, 8 o'clock, and we'll do it together. If not, grab the free course. That free course will teach you all about my 4 favorite entry setups. You'll learn about failures and pullbacks and strength and traps. You'll also learn my 3-step strategy, how we adjust, identify, and trade the setups. Grab the free course, little pop-up there in the upper right-hand corner. And don't forget, guys, I'm going to put all of the information on this stuff, all the free course stuff, all the trade room stuff. I'll put all those links for you right in the description of this YouTube video. Or if you're on the blog right now, right, it'll be a big button for you below the video tonight on the trading blog. All right, so now we've got a pretty good plan here on that. And again, don't forget to grab that free trading course to make sure you learn these patterns so you're ready for trading with me tomorrow morning in our trade room, or at the very least, make the most of our time together every evening on this newsletter. All right, let's keep going here. S&P is looking good. How about some crude oil? Let's get the black gold here, the Texas tea, right? The oil futures going here. What do we know about oil right now? Boy, oil, kind of a tale of 3 ranges here. We can see we are bullish. I think that's pretty obvious to see right now, right? Strong move up into a range, strong move up into a range, strong move up into a range. Now, ranges are really important because they act as magnets, right? They're high volume, they act as magnets. And so as I look at these ranges, you can see I've got one of these ranges identified as my battle zone. So I know I'm bullish. I want to be a buyer in this market right now, and I want to buy at support, right? You'll notice here I've got a lot of really great support levels. In fact, if I had it my way tomorrow, my ideal entry would be a nice deep pullback off of this, what I call a reversal line, right? This level right there, that is a prior swing high that can be used as support. So my ideal setup here will be to combine that reversal line, which, as you can see, is also the low of that range. I have a trend line coming in underneath, and I also have that hidden channel I've got drawn up off of those lows as well. So this is a very powerful spot here down around that 4017, 4023 area. That would be my ideal spot to be buying pullbacks here for tomorrow. Now, as you can see, though, there's a bit of range-bound market going on right now. And there's one big concern that I have, and that is kind of leading a little bit more of what we saw in the S&P, right? The S&P hadn't made it to its measured move. The oil does, right? The oil, of course, got to its measured move. So we have to assume there's a little bit of a profit target being reached, an objective being reached here for the buyers. We also can see too, there's this red line up here at 40, right, at 40.60. That is a big time top up there, right? That is a big time top. So it's pretty easy to see there that yes, the oil is bullish, and yes, I want to buy a pullback, but boy, that's going to be difficult to justify a shallow pullback, isn't it, right? A very shallow pullback is going to be a little bit tricky here, isn't it? Because I get it. We're very bullish. I want to buy, but it's not going to give us a very good risk-reward ratio. A lot of people are probably taking profit up here, and we're more susceptible to a deeper pullback. I'd love to get that deeper pullback, because that would kind of alleviate all those concerns of buying too high, not getting a good risk-reward ratio, because, of course, the better your risk-reward ratio, the more desirable that trade becomes. The more desirable it is, the more likely that trade is to work, right? That's one of the beauties of the self-fulfilling prophecy, right? The better the risk reward, the more attractive it is. The more attractive it is, the more reliable it becomes, because people tend to trade those more often. Okay, so how do we buy this pullback right now? I think the biggest thing is what do we get out of this range right now? What do we get out of the range right now? Again, it was kind of a tale of three ranges. So if we just keep going sideways here, not much will change. If I keep going sideways, not a lot changes here. My goal will be to get down in the buy zone here, get underneath the range, get some sellers to foolishly try to call a reversal, and just simply wait for those bears to commit, and I'll buy into their stop losses. Momentum is firmly bullish right now. There's no question about that. I do want to be a buyer. I want to buy off support, and I'll use a failure pattern to do that. Now, if we don't get that range and all we get is a shallow pullback, I'm not going to lie, this is a pretty strong finish to the session, and I've got a little bit more open space overhead up to that $41, right, a barrel up there, and they definitely could make that happen, because you'll notice they didn't seem to care much at all about that measured move. So the fact that they broke through the measured move, we may get that. Now, this is a lot like the S&P, where if I get a shallow pullback right now, what's my concern? My concern is you're going to have a lot more sellers up here than you'll have buyers. And my favorite way to kind of absorb those sellers is to let them try a couple times. Let them try once, let them try twice. And my ideal entry on a shallow pullback is going to be a trap. Basically, it's a nested failure with a trap entry. Again, I'm anticipating there may not be a lot of buyers who are eager to buy that aggressive, especially because, again, we're at a major high, we're at the measured move, we got that range here. So in order for me to get aggressive at these highs, I have to really let those bears try a couple times. Ideally, I'd like to get that double bottom, or a trap low would be ideal to be a buyer going higher. That is a perfectly valid setup. It's just you get to wait for it, because you have to wait for those bears to kind of wrap that noose around their neck, right, before you buy right into those stop losses, right? That's kind of the idea there. You've got to let the bears commit to it, and then once they fail, then you've got their stops to use as basically firepower for that run up to that $41 a barrel. So a nice little trap on that pullback. And again, if we do get the ideal pullback I'm looking for right now, that should be relatively easy to get that seller failure into a bullish pullback on the way back up to retest the high. Very similar, we just talked about on the S&P, right? We go below the moving average. We're very bullish, obviously, right? We haven't reversed yet. We'll talk about that here in a moment, right? We haven't reversed yet. We're just pulling back, and as we pull back, get underneath that moving average, look for those bears to try it, right? And we'll basically buy right into those stop losses, look for the pullback before we get back up to retest those highs. Now, what if we do get a deeper pullback here? That is a possibility, right? Again, we mentioned that ranges, they do tend to become magnets. So there is possibility here the market may kind of slip and fall, right, so to speak, down to that range here. If that was the case, if that happened and it didn't hold the pullback and turn bearish, right, you know what I mean? If it kind of just slips at the open and kind of crashes down, what I look for there is I'll look for a 1, I'll look for a 2. I like to grab a trend line off of that low, and I call these nested failures. Now, you're not going to need a trap on this, but it certainly wouldn't hurt, right? Certainly wouldn't hurt on this to get that trap off of that low, right? But that will be a nested failure if the market really starts to take a nice pullback, right? Now, what I would imagine, though, is if they can get that deep of a pullback there, they should be able to hold that pullback and run. If that's the case, there's that weekend gap, right? There's that weekend gap. I'm going to leave those weekend gaps right here on the chart all week. They'll be here until Friday, and I wouldn't be surprised if we use them a couple times here as targets for this week. So again, 1, 2, 3, reversal. I'm going to mark up that low. I'm going to mark up that high, find that high, right, and look for that short off the high of that channel, right? So 1, 2, 3, momentum. 1, 2, 3, momentum, or 1, 2, 3, reversal, as I call it. I'm not trying to sell that first pullback. Okay, it's very important we remember we don't want to get short just because of a strong move lower. It has to hold that pullback. Then once they basically put their money where their mouth is, once they confirm we're bearish now, then I can look to sell off the top of that channel. Now, I should also mention too, if the market keeps on grinding higher here, not a lot changes. I'm still waiting for that pullback. I'm still waiting for those seller failures, and we'll keep on looking to buy off these key areas of support here. We'll have to kind of see how the overnight session goes, and obviously tomorrow morning in our trade room, we'll do it all together. And again, I'll put all of the membership links for you guys to get registered for tomorrow morning's trade room, along with all the free course links, right, to get the free trading course to learn all about these entry setups as well. So grab that in the description, or there's a little button up top in the upper right-hand corner to grab that link for the free trading course. All right, oil is looking pretty good here. We got inventories on Wednesday for oil, so no big news until Wednesday on the oil. And how are we doing so far? Let me check in here real quickly here. Any questions, first of all? Any questions? Type those questions in the comment section below. How about a thumbs up on the video so far if you guys are enjoying it here, especially if you're here for the first time. And if you're still watching this video right now, hashtag still here in the comment section. Hashtag finish strong in the comments section. Let's wrap this video up here now with the gold here for tomorrow. Really great to be here with you guys and gals again. I missed you. I missed you over the break. Did you miss me? I'm sure you did. I'm sure you missed my ugly mug a lot over the break here. I missed you guys too. Always great to be back here. What do we got on gold here? Let's grab the yellow metal, the GC contract. Now, at first glance, it looks like just one big range, right? That's kind of what it looks like at first glance. We go up, we go down, we go up, we go down. That's kind of what it is. That's pretty much what it is. It's if you zoom out a little bit wider on this though, you'll start to see it's kind of more like a big wide spike in channel. We had that big rally last Friday, right? They gapped up. There's that weekend gap, right? Don't you worry. That'll be here all week here. And so it kind of looks like a strong move up, a pullback, a run higher. And what is that? That's a spike in channel. I'm going to draw off that high. I'm going to draw off that low. And this is a really wide spike in channel. Now, whether you want to call it a range or you want to call it a spike in channel, the ideal place to be buying this market is right down around those lows. Now, here's the biggest problem you're going to have. In any time you have a wide channel or you have a really wide range like this is momentum. Now, this is one of those scenarios where I want to buy down here, right? I want to be a buyer at the low. Again, whether you want to call it a channel like I have it here, or you've got a range, right? And you want to buy underneath the range, sell above it, buy underneath it, sell above it, right? Whichever way you want to call this, I've got it kind of as a hybrid right now. It is definitely a range, but you can see those higher highs up there, and that's what makes me think you see a lot of folks will be trading this like a spike in channel. Momentum is the big problem right now. So as we go down to that low, right? Well, look back here. Look what happened back here. We had that big pushback lower, and look closely how the bears, they try once, they try twice, and then they go up. The reason for that is the bears, after a big move down like this, they're not just going to push over and let the buyers take it, right? They're not just going to let the buyers take it. They're going to give them hell, right? So when this thing pulls back here now, I'm expecting these bears to give it a good couple tries here. And that's ideally what I'd like to see here off of these lows. I'd like to basically repeat, right, the long we saw earlier on the day today, repeat that once again here as we go. And there really isn't much of a variation to it because, even if I get, and again, you see the point I'm trying to make, right? It's a channel. We're bullish. So whether you want to call it a channel, there's my channel low. I want to buy off of that low. If you want to call it a range, which I think is probably kind of the hidden little, the hidden guy in here. If you want to call it a range, what do we do in a range market? We buy low, we sell high, and we use the range itself, right, as a magnet, right? So we go down, we come back up, right? Okay. And because we're overall bullish, I want to be a buyer. I want to buy at support using that magnet now, using the range as the magnet that it wants to be. The challenge we have, though, right, is the fact that when this thing gets back to that low, this thing will feel very, very bearish. And that's why, even though I want to be a buyer on this, I still have to respect the momentum in the market and really respect the opposite side of this stuff when we get those really wide ranges or wide channels. Now, I almost forgot too, if I call this a range, basically, you know me, right? I love these expanding triangles. So I draw my trend line off the high and I draw my trend line off the low. This might be the biggest kind of secret spot there for tomorrow. I'm not sure much of a secret it is any longer here now that YouTube knows about it, right? But the reality is, though, is this whole area down here is just ripe for the pickings, right? This whole area down there below that trend line, down to the low of that expanding triangle. And there really isn't much more than I can do besides nested failures on this, because even if we end up off the high of this battle zone right now, again, we're still going to feel very bearish. So as we come over, I want to see bears trying once. I want to see bears trying twice. Get them to commit. Get them to put their money on the line. And that will tell us now right where those stops are. And once we know where stops are, we can buy right into those stops for that rally going higher. Now, if we get lucky and the market really takes that big push down into the low of that kind of expanding triangle now what I'll do is I'm looking for, again, same basic idea here, right? But now make sure, remember, now we'll have a little more space here to work with. So 1, 2, I'd like to draw that trend line, right, on those off of those lows. Let those bears try twice. We'll look at that nice strong signal, and we'll look to buy right into those stops. Now, because we'll have more space to work here, we may also be able to get that pullback pattern as well. So that will be kind of the silver lining of this. If we could get that real deep pullback, right? You're not going to have a lot of space for much more than a failure pattern unless we get that deep pullback here. Hopefully that makes sense, right? So as we go lower, bears try once, bears try twice. Once I see them struggling, I can buy right into those stop losses. But there's not going to be a lot of room overhead to do much more than that. If I really get that deep pullback now I've got more space. Now I can go 1, now I can go 2, right? 1, 2, and I can now look for not only that failure, but also 2 now, that pullback on the way back higher, right? So failure into pullback combination for that run. Now, the hardest part here tomorrow is going to be if we get stuck right in the middle. If we get stuck in the middle of the range, I don't want to do anything. I want to stay away from the middle of this range, right? I want to wait for. Now, very good question here now. If the market was to sit here and go sideways, Does that change anything? It really does. It really does. Because if we sit and go sideways, that's going to absorb a lot of the bearishness and it will feel very range bound. So as we go lower now I don't have to be so worried about the bears. I can look for sellers to try and I can buy a lot more aggressively into those stop losses. But be aware though, right? Be aware if this thing goes sideways and we make a strong run lower, right, down into what I would really love to see here for tomorrow, then we still have the same problem. We still have momentum that needs to be absorbed, right? 1, 2, and then back up as we go. Nested failure patterns, right, as we call them in our trade room. And again, as I mentioned before, right, we want to stay out of the middle of that trading range. Now, what if the market runs higher? If the market runs higher, this is very, very important. Whenever you have a range, the key word is rotation. It's not just ranges, it's pretty much everything, right? But rotation. So if you think about this as a range, and if this is the range itself, the amount of the move above the range is usually going to be the amount of the move below the range. So the moral of the story is, if this thing just takes off to the upside right now and just ignores the complete rotation, what does that tell you? It's a very strong bull market. And in that case, I can't even try to be a seller, right? So don't even think about selling this market if this market was to make a run higher, because that is screaming bullish, 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 right? With a capital bullish when it goes higher. 2 patterns to watch for here. One would be a 2-try trap before we get up to the high of day. Again, very critical here. We get this pattern before we get to retest those highs. So again, market takes off into Asia, shallow pullback, doesn't pull back to the moving average, higher high in price, trap low. We call these 2-try trap patterns. They're very, very powerful patterns in specific situations. This is definitely one of them. Now, if we don't get that pattern, the market pulls back, don't be afraid to grab this now as a 1, 2, 3 breakout or a 1, 2, 3 reversal. Find that new channel, find that hidden channel, I should say, and buy off the low of that hidden channel. We have a lot of wide open space above us here right now, all the way up really to that 1798, 1800 area here tomorrow on the gold. So again, if we don't finish off that rotation, if we don't get that move lower that we're looking for here, if this thing pulls a U-turn and says we're running, right, again, very bullish because of the lack of rotation. That tells me now I can be more aggressive, right? I can be more aggressive here, looking for 2-try trap patterns before we go back to retest the high, or 1, 2, 3 reversals, 1, 2, 3 breakouts, 1 strong move up, pull back to the moving average, 3 strong move off. Now we know where they want to go, and we're looking for that new channel. Find that new high, copy and paste the low, find the hidden channel, and we're buying that hidden channel pullback. Now, another hard part about this is probably going to be a reversal on this, right? So how would we actually sell this market? Because as it goes lower, there's one thing I don't want to do, and that is I do not want to sell that pullback. Right, you're more than welcome to take that swing, but not me, man. That's definitely way too aggressive for me. What I want to see is what they couldn't get done earlier this morning, right? So strong move down, pull back to the moving average, and strong move off. That sounds great. That sounds fine to me, but I have to wait for that proof followed up with that strong jump off. Then I'm going to mark up that low. I'm going to mark up that high, and I'm basically looking to sell, right, off the high of that channel. Now, as we go lower here, again, lots of open space. Look at all the open space we have down there, all the way to last Friday's low at 1730. So this thing could really get good for the bears if they could take control. But again, be very careful because most buyers are going to be waiting down around those lows. And because it's such a wide range here, wide channel, I have a very specific pattern, right? Those nested failure patterns to help me absorb the market's momentum. Most important thing though is for tomorrow, make sure you get registered and come out and join me tomorrow morning in our trade room, because every morning we're going to put these charts back together again. We're going to prep our patterns and our rules, get our head on straight, get our charts all ready, and we'll execute the plan together. Now, there's no easier way to get started than to grab the link in the description of this YouTube video. Again, I'll put all the membership information along with all the free course info in the description of this YouTube video. So grab that link and get registered for either the free course or tomorrow morning's trade room. Either way, you'll find great value there. Don't be afraid tonight to call me in the office if you have any questions, right? Call that toll-free phone number, use that Skype or the email address. Or don't forget too, we also have live support. That live support tool is very easy to chat with me about any questions you might have, guys. All right, so wonderful job today. It feels good to get back in the action once again, dust off the cobwebs here on the newsletter, and I'm looking forward to another great week on the video newsletter, another great week in our trade room. Hope I'll see you guys and gals tomorrow morning at the opening bell with me. If you don't see you tomorrow, though, in the trade room, come back and join me tomorrow morning or tomorrow afternoon on the next edition of our nightly newsletter. That's all from me, guys. I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, we'll do it again tomorrow night. Don't forget, hit that subscribe button, thumbs up for the video tonight, and drop those questions, and I'll get them answered as soon as possible. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.